I know a lot of us want to know. Well, joining us to break it down is Andrew Busch. He's an economic futurist and the CEO at BPI. So, Andrew, tell us what the market is like today for somebody who is looking to buy a home in the United States. How are the prices?
Yeah, they've gone up significantly over the last 3 years, and also the cost of gaining a mortgage has gone up significantly, almost doubling. So if you had a medium house of about $400,000, the payment went from about $975 to almost $1,900 on that 30-year mortgage. So they've gone up significantly. We just haven't seen it completely feed through yet to all of the prices that are out there. So the costs have gone up to getting a home, but the prices haven't eased. We're seeing some of that develop where we're seeing less buyers. The mortgage index that you referenced has dropped significantly, over 20%. So it's starting to feed through. It's going to take a little while to see how this plays out, but right now it's coming off from extraordinarily high levels.
So talk to us a little bit about those interest rates. And I also just want to say that number that you mentioned, the United States is seeing a record high of almost $470,000 for a single family home. That's doubled in under 10 years. So it's already really high, like you just mentioned. But, we're seeing less of a demand for mortgages. And you spoke about those interest rates. What is happening with them? What are they right now? Is that going to change?
Well, that's the million-dollar question, right? They've gone up significantly. The markets are anticipating the Fed, the central bank here in the United States, to continue to raise interest rates. And it's being caused by so much inflation that's run through the U.S. economy. Now, the Federal Reserve knew about this inflation a year ago, so they've been playing catch up, and that's really what the problem is. So how fast and how far the Fed moves, that's the big unknown. And we've seen the stock market come off significantly because of this. We've seen the housing market start to soften. We've seen auto loans go down significantly in the United States, and consumer spending starting to drop significantly. And that's reflected in a lot of different surveys, whether it's consumer expectations going forward, but also in the Purchasing Managers Index. The United States number that just came out last week fell below 50, which means it's contracting. So all of these forces are at work with the interest rates. They spread out through the economy, but they do take time to really have their negative impact.
So, I guess the big question now is, are we going to be entering a deep freeze in the real estate market? And what is your advice to those who want to buy a home? Is this the time? Will it be the time soon? Or should we just stay away?
Well, I think it depends on where you're at. It's really a split housing market. The economy, as far as these prices go, the lower end, that's where you're seeing the buyers drop out because they just can't afford it. The higher end is held up better because those people have the ability to pay those higher interest rates and maybe do adjustable rate mortgages where they think rates can come back down. So what my advice to people is this, is like, be patient. There's no rush to get into a new home right now. There is much more inventory that's coming. More houses will be coming on the market over the next 6 to 9 months. So I would be patient and wait until you start to see those prices start to come back down quite a bit.
All right. Well, Andrew, I hope that you're right when you say that those prices are going to come down. I think, most Americans are hoping for a little bit of relief. Thanks for joining us.
My pleasure.
All right.